I'm Martin Frick, CEO at Moneythor, and welcome to the Deep Banking Podcast. Well, today in our podcast series, I have Alex Kling with me, Head of Strategy and Transformation of Synpulse for Asia Pacific. Maybe you want to introduce yourself first and Synpulse a little bit to our listeners.
Sure. Thank you very much for having me, Martin. Yes, I work for Synpulse. We're a Swiss consulting firm with a very large footprint in Asia. We have over 700 people in Asia across 21 different locations. We focus only on the financial services industry. I myself also only focus on the financial services industry for my entire career. It's been 20 years, most of that time in Asia, helping banks, insurance companies, and asset managers innovate.
That's great. So we seem to have a lot of overlaps. I'm doing similar things since 35 years. So welcome to the club. Maybe to get us going a bit, could you give us a bit of a lay of the land? What is how banking has changed over the last few years? Where are the trends that you're seeing? What has influenced this change in banking? Maybe to get us going.
Yes, thank you very much, and happy to do that. I think banking has changed in a couple of different ways, and maybe two things that I would highlight over the last couple of years. Number one, customer expectations have changed fundamentally. What customers want from banks is not anymore colored by what customers are already getting from their banks, but by experience they have outside of financial services, right? So people get instant gratification, they get hyper-personalization, they get experiences rather than products. These are all things that customers are getting from e-commerce brands, digital brands, and other things, other places, but increasingly expect similar types of experiences, similar offerings from banks. So customer expectations have certainly gone up. In order for banks to deliver that, that's obviously a tall order because banks are trying to square the circle, right? They've built all of this infrastructure, which is regulatorily compliant, super resilient, but can't move at the same level of pace and innovation that's required to achieve those new types of customer experiences that people expect, right? So technology has therefore moved on from being this necessary evil that it was when I first started my career in financial services to something which is now a critical enabler, right? The CTO now has a completely different standing in the C-suite, right? And what's delivered by technology is a much more critical part of the overall value proposition.
Okay. It sounds to me like consumers seem to be very much influenced by experiences they have in other places like Netflix or other, and they expect similar things from banks. Do you see some examples of banks, financial services providers that do this very well? They get closer to the holy grail of having a better, deeper relationship with their clients?
Yes, there's a couple of examples, and rather than naming specific brands, maybe I can give you a couple of sort of archetypes that we've seen have worked well, and particularly challengers do this very well, right? Number one is thinking of your value proposition less in terms of products, but thinking of customer needs and being very flexible, right? So for instance, when it comes to engaging your clients and offering them something that they want, right? Rewards, for instance, rather than saying, hey, you need to choose between a miles card, right? Or between a cashback card. Why don't you give them a product which allows them to choose, right? Where they want to be rewarded and how they want to be rewarded. And even that might change, right? So I get one reward today in miles, and tomorrow I've spent something and I get cashback instead, right? Or I can choose special categories in which I spend, and in those categories I accumulate a bonus spend or bonus cashback, and I can shift between those categories, right? So I think flexibility, and those banks which tend to be more the challengers actually, right, which have the tooling in order to offer that kind of flexibility to their customers, that's something that we've seen has worked very well, and more players are pushing into that direction.
Do you think this flexibility sounds great, but it also means that maybe clients become more flexible to change financial services providers? Do you see a change in loyalty behavior of consumers, or?
Yeah, look, banking is still a relatively sticky business because none of us want to change their bank accounts because it's associated with quite a bit of work, right? So if you compare banking to other industries, it tends to be a little bit more sticky. However, the flip side of that is two things, actually. Number one, customers do start thinking about switching after only 2 to 3 negative customer experiences, negative episodes, right? So if banks really do get it wrong, and they repeatedly get it wrong, customers are more inclined to switch, right? So that's a main watch point, right? The unhappy paths that customers tend to have with their banks. So that's one that they should definitely be watching out for. The second one is that customers looking to also experiment a little bit more than they used to before, right? So now that a lot of digital challenges have emerged into the banking space, and the threshold of signing up with them, the pain threshold has come down, right? I can sign up in the app, it's very easy to open an account, and therefore lots more customers, and it's not just the young customers, right? The Gen Zs, which are signing up for these new bank accounts, even middle-aged customers are signing up and trying out these new banks. It doesn't mean that they move their nest egg from their existing incumbent legacy bank to this new bank right away. But given that the pain threshold of opening a new account has come down, I think there's a degree of unbundling happening in financial services, right? Where people are trying out new service providers and perhaps moving part of their spending, part of their saving, part of their investment to some of those new customers and to some of those new banks rather, and therefore take business bit by bit away from the legacy players.
Okay. So I'm hearing now a lot about, I maybe switch my bank because my experience is better, I get rewarded better. Do you think product still makes a difference in banking? Or are they so similar from bank to bank that it's really very much centered about other things to make a difference?
It's a very good question. And I think while products matter in terms of what they offer you, right? You, for instance, think about investment products, trusts or ETFs, right? Of course, the products matter, what exposure I get access to, what kind of fees I pay. But equally as important as the products are the customer journeys that you use to wrap these products, right? So how do you start thinking about the customer in terms of their needs? How well do you then take the products and craft a solution which adapts to those needs and create a customer journey which allows you to meet those needs? I think that is as important as the products. And once you have that customer journey, you need to figure out how you open the filter, right? How do you tell people about their journey and get them on their journey? How do you nudge them towards their journey? I think those things have now a much bigger share in the success that players have than only just the products.
Okay. It's very interesting because, we started a conversation that consumers are looking for experiences that are similar to the tech companies like the Netflix of the world. But when I look at Apple TV, Netflix, Amazon Prime, for me, the difference is the product, the content, because the experience is similar. And apparently in banking, it's a little bit the other way around. Product is very similar. So I want to have a different experience, a different journey, to make clients more loyal, which kind of brings us to the question, how can I make them more loyal? What do I need to do to have more loyal clients?
Very interesting question, and indeed one that we get asked a lot from our banking clients, right? And I think loyalty is partly about value and the products that you sell, but also how easy you make it in terms of getting on board onto these journeys and giving people something extra, right? Making them feel valued. And there's two trends that we see generally in the whole loyalty and reward space of how banks are thinking about loyalty. Number one, instant gratification has become something that's a lot more important across different customer segments and different income segments indeed, right? If you give small ticket incentives to customers, whether it's free coffee or a small amount of miles or whatever it is, but you make that moment of gratification instant rather than waiting 2 or 3 months until you get the reward, that has a profound effect upon your customers, right? And if you have the right journeys, right, where I feel the impact of my actions right away, and I feel valued by the bank, that's something which can drive NPS considerably, that I will indeed not only keep banking with this particular provider, but I might tell my friends about it, and I become a promoter of the brand, right? Number two is using loyalty to reinforce and promote longer term behavior, right? So rather than giving that little hook, right, that little initial sweetener in order to start the engagement, what if I keep rewarding customers along the journey when they do certain things with me, if they give me business, if they refer additional customers to me, right? If they invest with me, if they transact with me, and building rewards, right, which over time can add up to something significant, whether it's a business class upgrade, right, or whether it's discounts on investment funds that I buy. I think that's something that's also quite critical, right? Building these quests that clients can follow and which at the same time are very transparent, right? So when building these loyalty and rewards journeys, what we found is that transparency upfront, rather than getting caught out by gotcha terms and conditions, right, is something that builds and promotes trust and increases the likelihood of the customer engaging with you and staying with you.
Okay, so me as a client, then I have a very personal journey and I know what I need to do to be rewarded upfront. That's exactly what you're saying. Do you think in these reward schemes is there how much of an influence has these providing services beyond banking? You know, but you were talking about upgrades into business class. You were talking about concert tickets, whatever. You know, so how important do you think this is for consumers, that you combine your banking services with services that go beyond banking?
I think it's something that banks are increasingly in tune to, because as a customer, I have multiple needs, right? And obviously the bank meets my financial services needs, hopefully, right? Otherwise, I wouldn't be banking with them. But given what we've spoken about, right, that products have increasingly become commoditized and are replaceable, it's really how do I differentiate myself further, right, as a bank to my customer by sort of meeting them on their terms, right, understanding their lifestyle. And they can have needs which are sort of adjacent to immediate financial services needs. There might be more sort of longer term planning needs, which go into banking, protection, and other things. But at the same time, give me benefits and understand what I really want, right? So what we do when we advise our customers on crafting really strong value propositions is spending a fair bit of time with individuals in that particular segment that I want to unlock and interview them. It doesn't mean that you have to talk to 10,000 people or even 1,000 people. If you speak to 10 people and understand what they want, that can be immensely valuable, right? And then finding propositions which allow you to play to their various different lifestyle needs, right? And craft something which attracts them and therefore goes beyond banking.
Okay. You were just mentioning the term segment in your answer, and on one hand we have segment, which is what the banks had for many, many years. And then we have this hyper-personalization, the segment of one.
Right.
Do you think this contradicts each other, or do you think this you need to have both? You need to have products for a segment and experiences for one, or how do I need to think about that?
Yeah, it's a really good question, and there's been a lot of talk about the segment of one, right? But ultimately, whether I can identify and play to a segment of one depends on the data that I have, right? Some banks have transaction data if you have that kind of relationship with the customer, but some banks don't, right? And often the data environments that we see in banks, perhaps have some questions that are
suboptimal.
They're suboptimal and questions are not fully answered, right? So what do you do if you have imperfect data, right? Either because of your internal constraints or because that's all you have on the client. Well, you start making assumptions, and perhaps rather than having this idealized segment of one, you can start putting client archetypes into certain buckets, right? You can say, well, look, I'm dealing with my 20 to 30s crowd who likes these kind of experiences, and I have something for them, right? I also have my young professional crowd who have started off in their careers, and they have certain needs, certain banking needs and certain lifestyle needs, right? And then I have my mid-career professionals and, silver generation who have other needs. And by putting together these personas, right, and figuring out what on average these personas might want, and starting to tailor my products into solutions for these personas, that's already a step that many banks still haven't taken, right? And it's a very useful step. And even though I'm not yet at the segment of one, I'm already tailoring my offering more to individuals. That's already better than just having 3 types of products and dear customer, please have fun with it and figure out yourself what you want.
So what I'm hearing is that we should think about segmentation maybe a bit different than in the past. In the past, when I was younger, it was all about money. You're a high net worth individual, you're not, and you say we should more think maybe in categories of similar behaviors or other things. Now, which are for a bank the more interesting segments? So which are the segments that are underserved and where you see a potential? If you do something in this segment, I think that's great because no one else does it.
No, that's a great question. One segment where we've seen a lot of interest as of late is what we call the emerging affluent segment, right? So they're your sub-gold premier customers with assets perhaps in the range of 10 to 100,000 US dollars to invest, right? What's interesting about this segment is that for the first time in history perhaps, the number of adults globally in that segment is larger than the number of adults in the mass market segment, right? Those with less than $10,000 to invest, right? And that has gotten a lot of banks to pause, right, and reevaluate how they can approach the segment and monetize the segment. The other interesting part about the segment is that perhaps a subset of those customers also have the propensity to become richer and become truly affluent, right, with more than $100,000 to $200,000, right, and therefore become even more interesting to clients, right? So what we've seen banks do now is to try to place bets on certain customers which have the propensity to grow and grow with them, right? And how do you do that? Well, you look at the various indicators that you have about these customers. Which of those customers, which perhaps only have $50,000 to invest today, in 3 years' time will have $150,000 to invest? How do you do that, and how do you engage them along the way? Because if you do that right, you have a massive commercial lever that you can pull. Because those customers who are affluent, as opposed to those emerging affluent customers, give me 5 times more revenues. Mm-hmm. However, they're also much more expensive to acquire, 20 times more expensive to acquire, right? So the commercial lever that I have to pull is identify those emerging affluent customers early, i.e. those which later on become affluent, and at the same time service them, grow along with them, and reap the benefits alongside them as they become more affluent.
How important do you think is technology to engage with this client segment? Because, let's face it, like any other commercial enterprise, banks want to earn money. And I think it cannot be very efficient to engage with personal relationship managers and so on with this segment, because that's usually what you do with the high net worth or ultra high net worth individuals. So in that sense, I guess it's more other ways you need to find to make it personalized. So how important do you think is technology in that context?
Technology is absolutely critical, right? Because if I'm, for instance, looking at the mass segment or the emerging affluent segment, it'll be very hard to devise an economic model where I cover these customers with RMs in a high-touch service model, right? I need to find a way of engaging them, of giving them something special, of making them feel special, but doing that in a digitally assisted way, right? So initially, I think the nudging, the financial advice, I want to deliver that to them through the app, right? Through digital tools, and I want to personalize it to them. I can only do that through technology, right? I use the data that I have about them to give them something which is quite tailored and which they can themselves customize further. To some of those customers where I make selective bets, I might want to give them RM coverage, right? But I can't have an RM spend an hour before the meeting preparing for that meeting, right? Because again, it won't be worth the while yet for customers in that segment. So I also supercharge my RMs with technology, right? I give them the tools to be able to service a lot more customers with the right digital RM-facing nudges to make sure that the RMs can do a lot more of those short meetings, add a human touch to the digital experience, but do that in a very cost-effective way.
Now I'm listening to this podcast and I say, wow, Alex convinced me I need to do something for my mass affluent segment. But it also sounds a bit confusing. I need technology, I need loyalty programs, I need to think about reward concepts, maybe new products. How on earth is the best way to get started on this journey?
Yeah, it's really about identifying a few bite-sized challenges which allow you to get started very quickly, right? Because indeed, if you listen to this, right, you need tooling, you need clients, you need data, you need analytics, you need all of those different things. That can be daunting, right? And if you embark on a 5-year transformation journey where you only reap the rewards after 5 years, right, nobody's going to sign up for that.
Maybe another guy is reaping then.
That's right. So it's really about identifying subsets of problems that you can attack over a couple of short sprints, perhaps over 8 weeks or 12 weeks, right? Where you can test these propositions with your own clients and get your own teams used to rapid iterations. What we find with banks, as opposed to non-bank organizations is that this notion of testing new ideas, failing fast is still something of a bit of a taboo, because in a bank, right, it's heavily regulated. Nobody wants to fail. But nobody gets customer engagement and these kind of new models right on the first try. None of the digital challengers that I've worked with, or indeed incumbent banks who've gone down that path, create the value proposition, they launch the value proposition and stick to exactly that value proposition. It's always been journeys of rapid iteration and testing, right? Okay. And getting your teams comfortable with that, getting your management teams comfortable with that is absolutely critical. So doing this in a safe space with bite-sized problems where people see the benefits of that and they try that with real customers is absolutely critical.
Okay. You said if I approach that, don't do the big bang, do it iteratively, do it agile, do it in sprints, whatever you want to name it. Now, I'm still a strong believer, if you do it that way, you should have clear KPIs. So how do you define success in these sprints, So do you have some ideas how I could measure success in these activities?
Of course, it needs to be measurable, right? And ultimately, the way that we've worked the best and the most successful is if what we're trying to achieve is aligned to the bank's overall goals, right? So for instance, if you say, hey, I want to have a go at unlocking my emerging affluent customers, right? We can work with banks to look at their existing customer base and based on the data, identify those customers which have a high likelihood of achieving an affluent status, or indeed are affluent, but the money is just not with the bank, right? As a next step, we can then help craft a value proposition, the nudges, and remove friction from customer journeys to make it really easy for customers to sign up. And then we run an experiment, right? When you say, look, out of the 500,000 customers you have, let's target 10,000 customers, right? As a initial prototype, as a POC, and hit them with this new customer journey, with this new value proposition, with these nudges, and see what they do, right? And based on how they react, we keep iterating the value proposition. We maybe run 2 or 3 iterations, and our outcomes by which we get measured are how many of those customers have we been able to convert and who have actually bought something from us, right? So that's a very simple one. But at the same time, we can also see, hey, because of this journey, we've learned about frictions in our journeys that we didn't know were there, and we were able to fix them and therefore reduce the drop-offs, which will help our entire business. And perhaps we've strengthened our value proposition because we started thinking about solutions rather than products, again, which has repercussions for the entire way that we run the business, right? So there's these short-term results that you can get straight away, and I would urge you to set those ambitious goals to straight away aim for conversion, but at the same time keep the longer organization goals in mind, which will help your entire business once you implement them and roll them out and scale them across the organization.
Now, how can Synpulse help me in that journey?
I think every step of the way is the answer, right? So we are a consulting firm which is truly end-to-end. Our focus is narrow in the sense that we only do financial services, we do nothing else. But within the financial services space, we do a bit of strategy. Perhaps less the where to play, more the how to win part, where we craft strong value propositions. We have designers who can help with customer journeys, UI, UX, and we have technologists which help you ensure that you have the right tools in place and make decisions of whether you buy tooling or whether you build tooling yourself. And then finally, we have business consultants who can wrap the entire piece together and ensure that with all the Lego blocks, you assemble them into the right figure and achieve the results that you want to achieve.
Actually, this brings me to another question. When I hear mindset, because I'm a CEO myself, so if I want to change the mindset of my people, of course, I can talk to them, try to convince them, but the other instrument I have is incentives. So do you think banks also need to consider their internal incentive systems or incentivize people differently internally, that they also embark on this journey? Because the consumers are ready, they wait for this, but I'm not sure how ready the bank employees are sometimes.
Yes, indeed. And I've worked on exactly those kind of projects which change the incentives, right? The OKRs and KPIs. Banks which have embarked on radical agile transformation journeys have gone down that route quicker than others, right? Because in order to get this agility to work, it's all about incentives and aligning the incentives with those outcomes. right? And those are, however, very complex transformation journeys, right? Because when you look at the incentives which often drive the operating system of the bank, the people operating system of the bank, they tend to be well entrenched, they're extremely hard to change, and you do need significant buy-in from the very top in order to push that change down through the organization, right? So I think it's something very important, but the only banks which have truly succeeded at doing so have had buy-in from the very top, from the CEO itself, in order to push that kind of radical change in thinking
I think
throughout the organization.
not having too much legacy also helps. If you're a startup, it's obviously easier,
of course,
because you can create this culture and you don't need to change 100 years of history.
Of course, the greenfield banks, the challengers that we've worked with, have a massive advantage in this because, well, they have the blank sheet of paper. They could design it as it should be, right? Whereas in legacy organizations, moving from A to B is always a challenge. So Martin, I've heard you speak a lot about deep banking in the past. Could you maybe explain to our viewers and listeners in a bit more detail what your understanding of deep banking really is?
Yeah, in essence, it's about having deeper relationships with banks. I think you mentioned it before, that you don't talk about your bank too often. Usually you talk about your bank when you have a problem, but you don't talk about, I had this great experience with OCBC or DBS. And so the question is, how can you create deeper relationships? And we think there are essentially three drivers for that. One is it needs to be personalized. We were talking about segments of one, but I need to feel important. It needs to be personal for me. It needs to be a reward that is relevant to me. I don't want to get a voucher for underwear if I'm mainly into electronics. So I think it needs to be relevant, personal. It needs to be proactive, maybe you can alert me that I have an issue with my funds going forward before I have the issue and then offer me a loan. So a proactive kind of system would be great. And as we talked before, I more and more, especially in the reward loyalty space, I expect experience that go beyond banking. I don't just want to have a cash rebate or a better interest rate. Maybe I want to have a free flight ticket, or I want to book a free travel somewhere. So how can you provide me experiences beyond banking? And I think if you get these three pillars right, then we think you can build a much deeper relationship with your consumers that goes much beyond providing a financial service. This is, in summary, what we understand under the term deep banking.
Thank you for that. Very much resonates with some of the work we are doing as well. And that's really the holy grail, right? Unlocking those kind of customer relationships where you build almost an emotional connection with a bank, which is a hard thing to do because banking is not a particularly emotional product, right? But I think you're right. It only works when you take the sort of full persona into account of the customer, right? You engage them in financial services and beyond financial services to build that deeper connection.
Now, of course, AI is the flavor of the day. Everyone talks about AI, Gen AI, ChatGPT, you name it. And do you think AI will give us more opportunities to be personal? Do you think AI changes the whole digital interaction? What are your views on this?
I think it absolutely does. Obviously, AI has gone through or is still going through the hype cycle, right? And there's a lot of talks and lots of our clients are coming up with use cases. But if you follow the technology very closely, which we are, because through our technology consulting practice, we actually deal with Gen AI every day. The horizon of what's possible keeps moving every few weeks, right? And use cases which were or seemed far out of reach 2 years ago are very much within reach today. I think when we started looking at generative AI, the consensus from every single bank was, look, we use this technology, but we make it employee facing. We don't want to let loose the Gen AI bots onto the customers ourselves, or the customers themselves. And while there's obviously still risks involved, I think the technology has gotten a lot better, and we've gotten a lot better around prompting and constraining the Gen AI bots, and exposing them directly to customers is a lot more realistic than it is today. I think the other part is that voice bots have also become a lot better and a lot more prevalent. We were running a POC the other day, and I had a conversation with a customer service bot that's Gen AI driven, and I had a a phone conversation with this bot, which was completely natural. What was also really strange is that the bot had exactly my voice. So it was Alex speaking to Alex. But this bot was able to voice concerns and make product recommendations, which I think far exceed what most customer service personnel in a call center would be able to do on the fly without putting me on hold, right? So the technology is advancing extremely quickly. Banks are becoming more comfortable, more savvy around risk managing the technology. So I think we'll see a lot more advances around especially customer service experiences, which are Gen AI powered, coming into the market over the next couple of months.
Okay, this also sounds a bit scary to me. I'm not sure where I want to talk to myself if I do a chatbot interaction with a bank. But you mentioned something interesting, that you use it internally for your employees. You know, we at Moneythor, we do something similar. You know, we have, without going into all the technicalities, we use JavaScripting a lot to create fancy use cases. And we recently developed an AI sidekick where instead of doing JavaScripting, you can talk to the thing and it creates the code for you. And we're using this internally first, you know, for our solution engineers, and then to fine tune it, and then we give it to clients. So I think that's a very successful path to implementation, because of course your failure resilience is a bit higher if you do it internally than when you give it to clients on day one.
That's right. And that's what a lot of banks are doing as well, right? They have assistance bots which support employees and make them smarter. And as you become savvy and you iron out the kinks through those internal use cases, at some point, these things are good enough in order to be passed on to clients, right? So we've seen that trend as well. There's not that many clients yet which have Gen AI voice bots exposed in their call centers directly. I know of one European bank which is trialing that in beta with live clients at the moment. But as I said, the technology is moving incredibly quickly, and what only used to be possible at a previously very high cost, over the last couple of months, costs have come down considerably, and therefore the use cases that are subsequently unlocked is ever increasing.
Yeah, we are experimenting with similar things. You know, this voice bot sounds to me like what we use, this agentic AI. So essentially, you can call the Moneythor APIs, but instead of calling them through a front end, the mobile banking or whatever, you can really calling them literally by talking. So I say, give me my account, etc., and then he calls the Moneythor APIs, and this opens complete new wealth of opportunities, because you can also now provide the Moneythor APIs to non-banking players that want to integrate financial services into their offering. Because they don't need to build a complicated mobile banking front end. They just need to include this agent into their offering, and you have access to the same information. You know, it's actually open up a wealth of opportunities for us as well.
That's right. And I think what you highlight there is a key trend that we've seen in generative AI, right? Where you move from sort of singular answers to specific narrow questions to agents plowing through more complex use cases, right? And we see it in the Gen AI capabilities that we all have access to as well, right? So we have OpenAI Deep Research and Perplexity Deep Research now, where if you use them, you can see the AI prompting itself, narrowing down on the topics and becoming clearer, more concise, and deeper in terms of the answers that you get, right? And I think these agents are going to have a profound impact on the financial services industry.
Something we also realized, or what is our thesis or opinion, is that you need to try to stay model agnostic. Because, you know, I have been involved in blockchain in the early days, and it was a little bit like AI now, a little bit the Wild West. A lot of things are coming and going, and I think you need to keep your options open. I think also my recommendation to a bank would be not to lock yourself into one language model, really keep it agnostic, because you don't know who's going to be the winner in the end.
Yes, absolutely. You don't want to be betting on the Betamax too early on in the game, right? And indeed, I think in the sort of architecture that we've seen in the banks that we've seen working in this space, I think that's the wide consensus, right? That, look, this game isn't over yet, right? And the real winners have yet to emerge. And is there going to be convergence onto a few players, or is this going to open up further with lots of competing smaller models? I think that's yet to be seen.
Okay, so this means our message to all of you is start experimenting, use AI in your front end, wherever, but keep your options open. Okay, so fantastic insights, Alex. It was great to have you on the podcast. And I'm sure I see you around the blocks.
Thank you, Martin, for having me.